Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Welcome to the biggest trading day of the year. Probably. I mean, we say that, but then something's going to happen and it won't actually be the biggest trading day of the year. But so far, the most anticipated trading event of the year, the Federal Reserve will release their Federal Open Market Committee statement. The Federal Reserve is expected to cut interest rates, and it's a really big effing deal. So, really big deal. It's a really big deal. And I can just see right there a couple of the robots jumping out here at 10 minutes. They're pulling. All of the short-term traders are getting out there. We just had a little bit of a reversal. I had a good trade this morning. Let's see how it goes. Let's change this title here. We should call this live stream FOMC Spectacular. Now, what will we call it? We'll just put FOMC at the beginning of it. How about that? We don't really have much people watching yet, but we will get in on that. So yeah, we got about 10 minutes, so I'm going to eat some food here. And we will get to the FOMC here. I think, I mean, the market's been going up, so I guess the market is saying that it's going to be dovish, but we will see. We shall see what happens. John says point the camera at the bird unless he's eating his sandwich too. Well, I can't. You can't really see him from here. Put the birds away. You know, someday, maybe I will set up bird cam or something. That would be fun. I'd really like to have like a light sign behind me. We could do some fun stuff in the future. We'll see. Okay, 5-minute warning. Better finish this food here. All right. First Squawk says U.S. Senate is aiming for final vote on spending caps and debt limit deal on Thursday. Republican Senator Rubio is source. All right. Well, sounds like that's going to happen. But I'd be a little cautious about that one. Interesting, the reversal that we had here. A little bit of they forced it down there. 2 minutes. The SNB and BOJ trading desks have the statement. It's going to be a big one, folks. We might have to expand our DOMs to the full screen, man, because it's going to move so quickly. Like, look at that. There's no size on. There's no size. If this moves, it's going to be like, well, you know, we could do something like this. Where was this? What was it? 16. $45 seconds. $30 seconds. What do you think the over-under is on Donald Trump tweeting about this afterwards? The chances of these actually filling, I think, are actually like really low, but you know, hey, we can have fun. Okay, here we go. E-mini is moving. The E-mini is moving. Okay, there was a 25 basis point cut. 25 basis point cut. And they're selling it. Looks like I got triggered there, but I don't like the way that that's going so far. George and Rosengren dissent. George and Rosengren dissented from the basis point cut. Did they wanted to be more strict? Ends balance sheet drawdown August 1st. That's good. I got to hear more about this this dissent here, man. Come on. Okay, here's the statement. Okay, I got filled on that one. So that's the news trade. Ooh, I could have held that for so much more. That really just busted down there, didn't it? I don't think we've ever had two people dissent. I don't think I've ever seen that. Okay, there's an iceberg right there. Wow, that did not take it much to turn. Man, you could lose so much money so quickly on this thing. The E-mini is unhappy. The E-mini looks unhappy to me. Two dissents, man. Okay, here's the changes. So they say that labor market remains strong and that economic activity has been rising at a moderate pace instead of saying rising. Household spending has picked up from earlier in the year. Growth. Business income has been soft. Okay, here we go. In light of the implications of global developments for the economic outlook, as well as muted inflation pressures, the committee has decided to lower the target range for their federal funds rate. This action supports the committee's view that the sustained economic expansion of economic activity, yada, yada, yada. The committee contemplates the future of the target range for the federal fund rates. It will continue to monitor the implications of incoming economic information. The committee will conclude the reduction of its aggregate security holdings in the system open market account in August, 2 months earlier than previously indicated. I'm getting something here. I don't think I can take this as its liquidity is still too low, and that whole trade is just based on it being slippery, right? Did they cut? Yes, they cut. They cut, but there were 2 dissents, and I don't know what the dissents were for yet. I suspect, though, that they didn't want to cut. Is what I would suspect. And we might not get to hear what the dissent is for until the press conference in 30 minutes. This is wild. Look, they're way back up to my price again. Starting to see more activity. It is pretty wild trading. The E-mini is just, whoosh. Look at that. Bounce. Whoa. Whoa. The fuck? I don't know what to do about what just happened there. I think you sell it. I could be wrong, but I think you sell it. Let's just watch. I've never seen that one's so crazy and the liquidity is still light. I don't want to take the risk. But we just saw a ton of huge orders come in there. A ton. I mean, like, just a massive. That was just wild. Did you hear all that clicking? Still pretty light. It's probably my eye doctor with my samples. Hell, they're kind of trying to push it back up. I don't know. Did I say I think you short that? No, I think that you buy that. When it was down there, it looked like it was only offers, but now I see that there was bids too. I mean, so that's a reversal, I suppose. But it's not really acting very confidently since then, has it? So just kind of watch and see what it does here, I suppose. Let's pull up the Fed channel here. YouTube.com/Federal Reserve. Live now. Do we get nice music? Oh yeah. Oh, just perfect music for this, don't you think, guys? Oh yes. Excellent. Good call, Fed. Good call. Great music. Just great. So a lot of wrangling around here in this area. I think based on the dissent that you still want to favor short, but I'm not seeing a safe place to take a short. Share the link for the press conference. Yes, sir. Put it in here. Well, let me put it in here. Yes. I didn't like it on DLive. There you go, though. Or you just do youtube.com/Federal Reserve, and then you'll see it right there. Just as a warning, because it's YouTube streaming, you know, they're delayed about as much as I'm delayed. So you're getting like 5-minute delay or something like that.
The Federal Reserve System works every day.
Then we're going to get some education.
Stable U.S. economy. Across the United States, the Federal Reserve, through its Federal Reserve Education Program, also helps people understand how the economy works, so consumers have the tools to make sound.
They have an education program?
Through this education program, teachers have access to classroom-ready online resources.
FederalReserveEducation.org.
Videos,
oh, and we have stuff by audience?
Publications, and more. These resources are all free for educators to use in their lesson plans, or as they see fit. Many of the Federal Reserve System's regional reserve banks, located in 12 districts across the nation, also offer in-person and online professional development that allows educators to deepen
resources
their knowledge and hone their
by
craft in
audience.
economics,
Look, we
finance,
can teach
and
little
more.
kindergartners. Students listen to the story Oxcart Man, in which a father and his family use various resources to produce goods. As you read the story aloud to students, place special emphasis on identifying how it takes resources to make goods and who buys the goods. In a market, students will then participate in a simulation of the circular flow of the economy. They use examples from the story to apply concepts learned in the model. How the circular flow shows interdependence between people and business in the resource and goods services markets. Okay. Okay.
And potential careers in economics and finance. Consumers are empowered to make sound financial decisions through the availability of easy-to-understand resources that explain personal finance concepts, the broader economy, and the Federal Reserve's role in it.
The Federal Reserve's role in it.
Equipping educators, educating students, and
This makes me happy. I love it.
Participating in our evolving economy.
Did they play this before everyone and I've just been missing it?
FederalReserveEducation.org to find
Here's your 16 and a half.
and reserve bank programs offered near you.
Are they gonna break
Follow
through
Federal
this?
Reserve Education on Twitter at FedEconEd.
I think they might push through here. Because usually they like to just screw with everybody, so they're gonna at least push through the last one, and then maybe they'll reverse. See, this is a 17.5. No? Come on. Do it. See? There you go.
To help promote a safe and sound monetary and financial system for our nation.
The Fed includes the Board of Governors in Washington, D.C., which has
Still
7
going.
members, including the chairman and vice chairman.
All of the members of the board are appointed by the President of the United States and confirmed by the United
All of these clicks are 11
also
out.
includes 12 regional Federal Reserve banks located in cities throughout the country.
The Reserve Bank
Something
serves as
happened.
the central bank's operating arm and also gather economic information from all over the country.
To help the Fed both monitor the economy and get the broad input necessary
to develop and implement effective U.S. monetary policy.
Today, the Fed performs a number of important functions, all with the ultimate goal of promoting a healthy U.S. economy.
One of the Fed's most recognizable functions is conducting U.S. monetary policy.
Which involves influencing interest rates and the availability of money and credit in our economy.
Congress has tasked the Fed with implementing monetary policies that promote maximum employment and stable prices.
High levels of employment provide people with more economic opportunities, and stable prices promote growth.
I do think it's a reversal, but that was making me nervous as hell.
Monetary policy decisions at the Fed are made by the Federal Open Market Committee,
which includes all 7 members of the Board of Governors and presidents from the Reserve Banks.
This committee meets regularly to assess the conditions and outlook for the economy.
In addition to conducting monetary policy, the Federal Reserve also helps to supervise and regulate the nation's banks.
There is some real disagreement here. What's going on?
And businesses.
The Fed also works with communities, nonprofit organizations, and others across the nation to address housing problems, promote equal access to credit, and advance economic and community development.
Iceberg at 19.5.
Instability in the financial system, because instability in the financial system can pose a severe threat to the broader economy and communities across the nation.
The Fed also acts as a bank to other banks by clearing checks, making electronic payments, and providing the currency that Americans need and use every day.
Our nation's economy and financial system face constant challenges.
The Fed is working every day to address those challenges and is committed to helping foster good economic conditions and outcomes. Employment opportunities, stable prices, and financial stability that benefit all Americans.
And we are also the Fed.
To learn more about the Federal Reserve, you'll find a wide range of resources on the Board of Governors website at federalreserve.gov.
This is super interesting, this spot right here. I've never quite seen anything like this. Oh, what happened to my little thing? Here we go. You know, it says that I made 125 today, but that's a lie. I made 203 today. It's a lie. Uzi wants it. Is he gonna get it? Ooh, it's so close. Come on. Oh, one more. Oh, look at them flipping them. I think you can get it, bro. I think so. Oh, come on. Well, this is just an infuriating area. No, thank you. I don't want to talk to people. Kind of gave a tepid signal there. Very, very tepid. Jeez, one tick away. You gotta be kidding me. Federal Fund Futures implied traders see 78% chance of Fed cutting rates again in September, according to CME Group FedWatch. The great experiment is over after the Fed's balance sheet rose to $900 billion to $4.5 trillion to make the rich richer. It only shrank to $3.8 trillion before the Fed capitulated. I don't know if that means that the experiment is over. I think that it just means that you shouldn't have been raising rates and doing that at the same time. What they should have done is they should have raised rates first, and then they should have done that program. I don't know. I'm sure that there's somebody much smarter than me that could tell us which one would be better to do first, but I don't think you do both of them at the same time. Are we above the news price now? I think we are. That's a new high. There you go. Uzi got his number. It's still going. There's some pulling all the way up to 28 too. I don't know about this one, man. There was so much volume there at 19 fighting around. They kind of came up, and now they're still kind of... He says 157.01 is the only other number I got. Well... Man, this kind of action, taking a trade in this kind of action just makes me, like, scared. I'm shaking in my boots here, man. This is pretty wild. I don't think this is the wildest FOMC I've ever seen, but this is pretty wild. There's certainly some contention here in the 20 to 19 area, though, huh? Let's see if this resistance zone becomes support now. It's not going there, I know, at least not today, I think. Come on. You know now that you've said that, right? Now that you've said that, they're almost going to be emboldened. Uzi doesn't think that we're going to make it to 01. Everybody buy it now. Prove him wrong. Is there a crane next to the Federal Reserve there? In that picture. And that's a lot of ticks. So were you long all the way from this morning or what? When did you get in? It sure would be interesting to have taken it long from like the 09 half. Well, not the 09 half. This one that we weren't sure what it was, but it was a reversal. At 13 long would have been a good trade. I also don't like that there's only 3 minutes left. Let's just try getting a quickie here. I'm afraid that fall there might have been short-term traders exiting. Okay, that worked out. Whew. Actually, could have gotten 2 or 3 off of it. Gotta have some fun with it. Granted, it's easier when I don't have any money on the table, right? Why, you'll see many trading days like this, huh? This is the first time I've seen a rate cut. And now, the market action to me looks kind of random, to be honest. Like, there's definitely some big guys in there pushing it around, but I don't really see any rhyme or reason to it. But something that does stand out to me is what people on Twitter are saying. People really hate the Federal Reserve, what can I say? Okay, they're pulling. Was that a pull? There's a bunch of asks being put on. At 22. Before the release, I was curious if they were pumping the market up for a thrust down on the release. That sounded like something shithead market makers would do. Totally, right? Well, and they did push it up and then dumped it, huh? But we're right back up here as well. When we hit that bottom where I took the long, maybe I should have kept it, but the market has been much quieter since. They in a different press conference room? Because, like, look at the wall is like bricks. They should have a nicer room for them than that. Chief economist loses it after historic rate cut, slams Fed in epic rant. MUFG chief economist Chris Ruperke, nobody I've ever heard of, hardly needs any commentary as it's about as close to a perfect reaction to the idiocy unleashed by the Powell Fed as can get. This guy, totally unbiased. Totally unbiased news outlet.
Good afternoon and welcome.
Okay, here we go. My recommendation, don't trade the press
target
conference.
for the federal funds rate by 1/4 percentage point to a range of 2% to 2.25%. The outlook for the U.S. economy remains favorable, and this action is designed to support that outlook. It is intended to ensure against downside risks from weak global growth and trade policy uncertainty, to help offset the effects these factors are currently having on the economy, and to promote a faster return of inflation to our symmetric 2% objective. All of these objectives will support achievement of our overarching goal to sustain the expansion with a strong job market and inflation close to our objective for the benefit of the American people. We also decided to conclude the runoff of our securities.
You must have about a 15-second delay there, probably. Well, yeah, I'm probably like 5 minutes delayed anyways, and that adds up, and then...
As the year began, both the economy and monetary policy were in a good place. The unemployment rate was below 4%, and inflation had been running near our 2% objective for 9 months. Our interest rate target was at the low end of estimates of neutral. Over the first half of the year, the economy grew at a healthy pace, and job gains pushed unemployment to near a half-century low. Wages have been rising, particularly for lower-paying jobs. People who live and work in low and middle-income communities tell us that many who have struggled to find work are now getting opportunities to add new and better chapters to their lives. This underscores for us the importance of sustaining the expansion so that the strong job market reaches more of those left behind. Through the course of the year, weak global growth, trade policy uncertainty, and muted inflation have prompted the FOMC to adjust its assessment of the appropriate path of interest rates. The committee moved from expecting rate increases this year to a patient stance about any changes, and then to today's action. The median committee participants' assessments of the neutral rate of interest and the longer-run normal rate of unemployment have also declined this year, reinforcing the case for a somewhat lower path for our policy rate. These changes in the anticipated path of interest rates have eased financial conditions and have supported the economy. At our June meeting, many committee participants saw that the case for lowering the federal funds rate had strengthened, but the committee wanted to get a better sense of the overall direction of events. Since then, we've seen both positive and negative developments. Job growth was strong in June, and looking through month-to-month fluctuations, the data point to continued
You
strength.
see that? 2 ticks up, 2 ticks
We
down.
expect job growth to be slower than
That's
last
why you
year,
don't
but
trade
above
the
what
press
we believe
conference.
is required to hold the unemployment rate steady. GDP growth in the second quarter came in close to expectations. Consumption, supported by rising incomes and high household confidence, is the main engine driving the economy forward. But manufacturing output has declined for 2 consecutive quarters, and business fixed investment fell in the second quarter. Foreign growth has disappointed, particularly in manufacturing and notably in the euro area and China. In response to this weakness, many central banks around the world are increasing policy accommodation or contemplating doing so. After simmering early in the year, trade policy tensions nearly boiled over in May and June, but now appear to have returned to a simmer. Looking through this variability, our business contacts tell us that the ongoing uncertainty is making some companies more cautious about their capital spending. The domestic inflation shortfall has continued. Core inflation, which excludes food and energy prices and is a better gauge of future developments than is total inflation, has run at 1.6% over the past 12 months. We continue to expect that inflation will return over time to 2%. But domestic inflation pressures remain muted, and global disinflationary
This is the first time they've cut rates in 11 years. Yeah,
wages
in
are
11
rising, but not at a
years.
pace that would put much upward pressure on inflation.
11 years. There's a line in Neon Genesis Evangelion about that they hadn't seen each other for 11 years.
Worrisome and difficult to reverse downward slide in longer-term expectations. So, taking all of that on board, the committee still sees a favorable baseline outlook. Over the year, however, incoming information on global growth, trade policy uncertainty, and muted
Spent a lot of time in 19, haven't they?
Gradually lower its assessments of the path of policy interest rate that would best support that outlook. Today, we judge that those factors warrant the policy adjustment I described. As the committee contemplates the future path of the target range for the federal funds rate, it will continue to monitor the implications of incoming information for the economic outlook. And will act as
I wish I speak. Is that Korean? That looks like Korean to me. I have no clue what that is. But it looks cool. And thank you for watching. Questions? Let's go.
Hi, Chair Powell. Gina Smilik with the New York Times.
Give it to the New York Times first, huh?
Here, I guess the question is there any reason to believe that a 25 basis point cut is going to be sufficient to expediently return inflation to your 2% target? And if not, what are you going to be looking at to convince you that you need to cut rates again? What is the hurdle rate there?
So I think you have to look at not just the 25 basis.
Did you see what she was wearing? That must be
look at
hot.
the committee's actions over the course of the year.
Like it must be really warm. It's summer. Why are you wearing? That's like winter clothing, hon.
Expecting some rate increases. We moved to a patient setting for a few months, and now we've moved here. And I think what you've seen over the course of the year is, as we've moved to a more accommodative policy, the economy has actually performed just about as expected with that gradually increasing support. And I think I wouldn't take credit for all of that, but I do think that increasing policy support has kept the economy on track and kept the outlook favorable. In terms of the rest of your question, the committee is really thinking of this as a way of adjusting policy to a somewhat more accommodative stance to further the 3 objectives that I mentioned, to ensure against downside risks, to provide support to the economy, that those factors are where factors are pushing down on economic growth, and then to support inflation. So we do think it'll serve all of those goals, but again, we're thinking of it as essentially in the nature of a mid-cycle adjustment to policy.
Michael McKee from Bloomberg Television and Radio. There's a perception out there that perhaps in this case the Fed is something of a hammer in search of a nail, because the latest consumer spending reports, as you suggested, don't seem to show any kind of demand problem in the U.S. And when you look at mortgage rates, auto lending rates, they've all come down. And so I'm wondering exactly what problem lower capital costs will solve.
So you're absolutely right. The performance of the economy has been reasonably good. The position of the economy is as close
it's
to
raining indexes.
The
E-mini just got killed.
The outlook is also good. What we've been monitoring since the beginning of the year is effectively downside risks to that outlook, from weakening global growth, and we see that everywhere.
I don't get what it is that he said that
now, particularly in the European
it's
Union,
causing
China.
it to move like that.
In addition, we see trade policy developments, which at times have been disruptive and then have been less so, and also inflation running below target. So we see those as threats to what is clearly a favorable outlook, and we see this action as designed to support them and keep that outlook favorable. And frankly, it is a continuation of what we've been doing all year to provide more support against those very same risks.
But the follow-up question is, how does it do that? How does cutting interest rates lower, or how does cutting interest rates keep that going, since the cost of capital doesn't seem to be the issue here?
I really think it does, and I think the evidence of my eyes tells me that our policy does support, it supports confidence, it supports economic activity, household and business confidence, and through channels that we understand. So it will lower borrowing costs, and it will work. And I think you see it since, since we
Can you really not explain how Federal Reserve using
financial conditions move up, and you saw, I won't take credit for the whole recovery, but you saw financial conditions move up. You see confidence, which had troughed in June. You saw it move back up. You see economic activity.
What the fuck is going on?
It seems to work through confidence channels as well as the mechanical channels that you are talking about.
I wonder if Ace is still short. That would be fucking awesome, dude.
You always say that the Fed is data dependent, and much of the data that we've seen since the June meeting has surprised to the upside, or at least been in line with expectations. Can you give us a sense of how that better than expected data impacted the FOMC's thinking, and if we keep seeing these upside surprises, does that change or evolve any FOMC thinking going forward?
So yes, I mean, I think
I still don't see any rhyme or reason to how it's moving.
We do it every meeting, as I
Powell in hot water.
We do a deep dive into
I don't know, man.
economic activity and global activity, and certainly carefully went through U.S. economic activity, which there's been some positive and some negative, but overall the U.S. economy has shown resilience during the intervening period. But again, the issue is more the downside risks and then the shortfall in inflation, and we're trying to address those. So in addition, going forward, I would say we're going to be monitoring those same things. We'll be monitoring the evolution of trade uncertainty, of global growth, and of low inflation. And we'll also, of course, be watching the performance of the U.S. economy. As I mentioned, it had shown some resilience here to those issues, and we'll be putting all of that together, and that's how we'll be thinking about policy going forward.
I just want to follow up on that. Would you say we're sort of, you guys have gotten into a new regime here? This is sort of an insurance cut and not a data-dependent cut?
Did give us a reversal there.
In the realm of watching headlines of trade talks than we are watching unemployment rate and inflation numbers and growth numbers? How do we know what you're going to do next and why now in this new regime?
Okay.
So I gave 3 reasons for what we did, and that is to insure against downside risks to the outlook from weak global growth and trade tensions. So that is, in a sense, that is a risk management point, and that is a bit of insurance. But we also feel like weak global growth and trade tensions are having an effect on the U.S. economy. You see it now in second quarter. You see weak investment. You see weak manufacturing. So support demand for it there. And also to support return of inflation at 2%. So but there's definitely an insurance aspect of it. Trade is unusual. We don't, the thing is, there isn't a lot of experience in responding to global trade tensions. So it is it's something that we haven't faced before and that we're learning by doing. And it's not exactly the same as watching global growth, where you see growth weakening, you see central banks and governments responding with fiscal policy,
Minnie,
growth
stop.
you see a business cycle.
Minnie, what you doing?
With trade tensions, which do seem to be having a significant effect on financial market conditions and on the economy, they evolve in a different way, and we have to follow them. And by the way, I want to be clear here. We play no role whatsoever in assessing or evaluating trade policies, other than as trade policy uncertainty has an effect on the U.S. economy in the short and medium term. We're not in any way criticizing trade policy. That's really not our job.
It's unhappy, man. It is not happy.
Thank you. Nick Timmeros of the Wall Street
They
Journal.
cut.
So, Chair Powell, you
cut
and your
the
colleagues
rates.
have offered
What do we
reasons
got to
cut
do
rates,
to make
lower
you happy?
neutral rate that may
We
make
cut the
policy a little
rates.
bit
You should be
tighter
going
than
up.
anticipated. The global slowdown, the darker risk picture,
Oh,
trade
man.
tensions, and this desire to recenter inflation and inflation expectations. I wonder which of those factors, if any, weighs most heavily on you, and more importantly, is a quarter point cut really going to address all of that, let alone any one of those?
So I actually think different people have different weightings, has been my experience on those things. You mentioned lower R-star, trade slowdown, and I would actually add lower natural rate of unemployment too has moved down. All of which kind of point to more accommodation. So again, I don't think asking about a quarter point is really the right question. I think you have to look back over the course of the year and see the committee moving away from rate increases to a neutral posture to now a rate cut. So I think we've been providing, and that affects the forward rate path, and it affects financial conditions, and financial conditions affect the economy. You see an economy which is actually performing pretty well. Growth in the first half of this year is about the same as it was in all of 18.
Oh, okay.
And
Okay.
a little better
That's now it's getting a little
forecast
silly.
in 2019, at the end of 2019. So I think in a way that's monetary policy.
Oh, I bet Trump's going to be pissed. Just wait until Trump comes out and tweets. Oh, man.
In May, it seemed as if you were setting a higher bar to cut rates. There would need to be a deterioration in the outlook. In June, you seem to suggest that
Probably the algo's selling. I don't know.
Where is that bar right now? Because I think there's some confusion about how.
Yemeni's so upset.
Yeah, so we, as we noted at the bottom of the statement that language which really says how we're thinking about it. So it says as we're
oops. Sorry.
The information and
Come
talks
on.
about that language. So, I can't. All I can tell you is we'll be looking at weak global growth. We'll be looking very carefully to see how that's happening. I think you learn every cycle. You learn about these things. So, we will see whether growth is picking up, whether it's bottoming out. We'll see that picture.
So there's
We'll
a
also
point
see
of
on
a
trade,
naked point of
we're
control at
seeing
29.86 even that they might want to go for.
And on inflation, we will. So, in addition, the U.S. economy itself is the performance of the U.S. economy will enter into that. So, I would
Soundplace
love to
says
be
my
on the side
best
of
day this
trade.
year,
It
so
is-
he
it is a
must have
factor that
just
we
been short
have
this
to
whole time.
assess in a kind of a new way. Those are the things that we'll be looking at, and in making our decisions going forward.
Edward Lawrence with Fox Business Network. So a rate hike last December was seen by some economists and the St. Louis Fed President James Bullard as a step too far. Now the Fed's waited about 7 months for a rate cut. You said today you were concerned about downside risks. So could some of the weakness on the business side with that fixed investment and the sluggish side on the business side be because the Fed waited so long? I want to get your thoughts on that.
Gav Trader says, Powell signal to Trump. If you want more rate cuts, do some more stupid trade stuff.
We don't hear that from businesses. They don't come in and say we're not investing because the federal funds rate is too high. I haven't heard that from a business. What you hear is that demand is weak for their products. You see manufacturing being weak all over the world. Business investment is weak. And I wouldn't lay all of that at the door of trade talks. I think there's a global business cycle happening with manufacturing and investment, and that's been definitely a bigger factor than certainly we expected late last year. I think global growth started to slow down in the middle of last year, but that has gone on to a greater extent. And by the way, trade policy uncertainty has also been, I think, more elevated than we anticipated. In terms of is this the way, we believe this is the right move for today, and we think it will serve the three ends that I mentioned, and I've already gone over how we're thinking about going forward.
Reuters, you called it a mid-cycle adjustment to policy, and I mean, what should we take this to mean, and what message do you mean to send with this move today about future rate moves?
Well, the sense of that is, I mean that refers back to other.
So they just took that naked point of control. I've seen some pushback now at this level. Some major happening over in the Treasuries too.
Cutting cycle.
Look at that.
That is not. That's not what we're seeing.
Big orders.
That's not
huge increase in big orders.
Hi there. Are there any circumstances under which you would decide to pause at one interest rate cut today?
They're going to turn it here?
Not go ahead with further
no, they're going to
monetary
push
easing
through
at this stage, or are you predicting that once you've embarked on this easing, you will have to at least move by one more notch going forward?
So our policy will depend on the implications of incoming data for the economic outlook, as well as evolving risks to that outlook. And so we're going to be monitoring the implications of incoming information for the outlook.
I guess you just can't stand in front of that.
So
can you imagine if you had shorted it from the top of this thing? Good grief.
Hi, Victoria Guida with Politico. On capital, Vice Chairman Quarles has said that the level of capital requirements that exist right now are such that it's basically like the countercyclical capital buffer is already turned on, and that he would like the ability to be able to turn it down in a downturn. I was wondering if you agreed with that. And then also, just quickly, on real-time payments, larger banks have suggested that if the Fed built its own system, that would be a bait and switch because the Fed asked or called for a private sector system. Do you think that is a fair assessment?
Okay, so on the first, I would say that I view the level of capital requirements and the level of capital in the system as being about right. I do agree with that.
This market
is
pissed off.
That Vice Chair Quarles has talked about.
I don't even think they know why they're unhappy. They just know that they're unhappy.
We've chosen in the United States to have high through-the-cycle capital requirements by doubling the SIFI
Look at
surcharge,
this.
which is the surcharge that the largest banks have in their capital requirements. We've, in effect, already put in place substantial countercyclical buffers. And so conceptually, you can think of, I'm not saying it's the same thing as a countercyclical capital buffer. So that's really the point, is that we don't rely, our system doesn't rely on our ability, mainly rely on our ability to identify the right time in the cycle to trigger countercyclical tools. We rely on through the cycle, always on high capital and liquidity requirements. And I think that's a good thing to do.
How could it be 2967?
Of putting it in place. So
you gotta be fucking kidding me.
Jurisdictions have done, and it's worth considering. I think the United Kingdom in particular has a countercyclical capital buffer that's always on, but that the one point of it.
Okay, they're pushing again.
there's a downturn, and therefore give the banks more room. So this isn't something we've decided to do. It's just under consideration. In terms of the real-time payment system, your second question. So this
In
is
the
something
2-year now,
the
up
United States
over
is far behind
400.
other countries in terms of
You
having
made
real-time
400 on the 2-year note?
public. The Fed
Is that what you're
really
saying?
coming out of the reserve system.
I mean, I made $200 and I'm
and
I'm
the board
scared
together
as heck to
convene,
touch it.
all of the stakeholders around.
I'm watching this
the
as
table
like
to talk about how we can move forward.
there
This is
seems
consumer
like that there
groups,
might be another
technology
wave
companies,
here.
Banks, card companies, pretty much all of the groups who would be interested, and worked on a project for several years. And one of the things that came out of that was a recommendation that the Fed should build a 24/7/365 real-time settlement system to solve that problem, to address that problem. We put out a proposal in October of last year about, should we do this? And we got quite a lot of comments. They were overwhelmingly favorable. And I would point out that in our payment system, in many places, the Fed operates alongside private sector operators, for example, in wholesale payments, in ACH and in check. So it wouldn't be unusual.
It might not be done, but I'm getting enough.
How we've done
I'm
things.
getting enough of a rate
We have
to
not made a
make me
decision on
uncomfortable
this,
again.
And but it's something we're looking at carefully, and something I do expect we'll make a decision on soon.
Doris from Bloomberg. I'm trying to parse what you're saying here. On the one hand, you say the policy tilt in this statement is ease financial conditions.
Boom,
that's
look at
helping
that.
the economy.
Would have worked.
And that tilt, market participants are interpreting this language will act as appropriate as still being in the statement.
I got out at 4.
And on the other hand, you say it's not the start of an easing cycle. So what are you saying? Does that mean
What are you
one or
saying?
two more cuts will be done and this policy bias comes out of the statement? Or simply that this policy bias will come out of the statement sooner than market participants think?
So it is, as I mentioned, it's going to depend on the evolving data and the evolving risk picture. But as we look at the situation now and the outlook now, what we see is
You broke it. Zero Hedge posting a picture of the S&P 500. It's recovering.
Somewhat more accommodative stance.
It's
That's what
recovering.
we're
I should have held that.
And that's what we're going to be looking.
Boom.
Looking
Get out.
at incoming data,
Right
at
there.
all of the at the risks that I mentioned, and the performance of the U.S. economy and at low inflation.
Yeah,
We're
you
looking
get out
at,
right here.
to make our decisions going forward.
Could have taken 2 to 6 though. Should have held it.
Thank you, Mr. Chairman. Scott Horsley from NPR. You've talked a number of times about the people who feel like they are just recently getting to the punch bowl 10 years.
I was thinking about holding it, but I'm at plus 16 today, and plus 16 is like,
Well, I think the best thing for people who are
I don't know if you trade after that.
who are feeling
But
that,
the
I mean,
way
we
that
are
this has
getting
been working and the consistency that I've been getting, even in this kind of wild and crazy action, makes me think that maybe I should keep going.
They're now feeling the recovery, and
Well,
in fact, they haven't felt a better labor
I think
market.
today I'm just going to keep
This is great to hear.
track.
And I guess my view is the best thing.
That was a turn right there at
sustain the
08.
Expansion, keep it going, and that's one of the overarching goals of this move and all of our policy moves. There really is no reason why the expansion can't keep going. Inflation is not troublingly high. If you look at the U.S. economy right now, there's no sector that's booming and therefore might bust. You have a fairly well-balanced, in a sense, economy. Now, the engine, though, is really consumer economy, which is 70% of the economy. The manufacturing economy, the investment in manufacturing part of the economy, is more or less not growing much. It's at a healthy level, but not growing much. So, and we hope to help
Okay.
with this rate cut. But I would say overall, we're trying to sustain the expansion and keep
10K traded at
close to our
09.5?
staged rate, which ensure
Wow.
maximum employment and stable prices.
Chairman Powell, Donna Borak with CNN. The president has repeatedly called for this rate hike and for the Fed to end the runoff of its balance sheet. What do you say to those?
Oh, now, what do you
that
say
that
now?
The Fed gave in to what the president wanted today, and could you also elaborate a little bit further on why the Fed decided to speed up its balance sheet runoff 2 months earlier today?
So I gave my my reasons for our reasons really for doing this, And just to touch on that again, this action is designed to ensure against downside risks to the outlook from weak global growth and trade tensions, offset the negative effect that those factors are already having, and promote a faster return inflation of 2%. That's what we've been talking about all year long, and we've gradually moved our policy in the direction of more accommodation. I think what you see is an economy that has reacted well to that. So that's what we're doing, and that's why we're doing it. We never take into account political considerations. There's no place in our discussions for that. We also don't conduct monetary policy in order to prove our independence. We conduct monetary policy in order to move as close as possible to our statutory goals, and that's what we're always going to do. We're always going to use our tools that way, and then at the end, we'll live with the results. In terms of the balance sheet, that was really just a matter of simplicity and consistency. Really nothing more to it than that.
The E-menu's turning again.
Thank you, Chairman Powell. Greg Robb from MarketWatch. I was wondering, we weren't in the room, but I think it's a fair assumption to know that the two dissenters probably spoke about financial stability concerns. So I was wondering if you could talk about what was your response to them when those concerns were raised. I've collected a couple of things from the IMF and the Bank of International Settlements, said that it's just when you have low rates, you just get more debt in the economy, and that this is also this feeling that it makes it harder to raise rates. So could you talk about that? Thank you.
Yeah, so first let me say, I'll just speak for myself, but I understand those concerns very well. I do. I've studied them, I've spoken about them, and I take them very seriously.
Wow.
But as I look at today's situation, I don't see them as a reason not to take this action today. I just don't think that would be my point.
Look at this iceberg.
And one of the reasons why I think that is, if you look, so we have a financial stability framework now for the first time. Before the crisis, we didn't have this, but now we have it and we publish it, and we look at really 4 big things.
Okay, well,
so
I'm,
we know we can,
I'm done.
Hold us accountable and compare us meeting to meeting and see whether we got this right. So it's transparent now. But the 4 things we look at are valuation pressures, and we do see notable valuation pressures in some markets, but
what the
fuck? At a highly troubling level. In terms of household borrowing, household and business borrowing is the second thing. Households are in a very good shape overall.
Oh, I forgot that was the options clause, wasn't it?
And funding risk is low. So overall, staff's view has been, and my view has been, that if you look overall, financial stability vulnerabilities are moderate. The place that gets all the attention right now, a lot of attention, is business borrowing, and we look very carefully at that. What's happening with business borrowing is the loans have moved off the balance sheets of the banks and into market-based vehicles, which tend to be stably funded.
Where did I take that from?
Nonetheless, it's clear that a highly leveraged business sector could act as an amplifier to a downturn. So we're watching that very carefully. But I think if you look overall at the U.S.
I think that the options clause tricked me there. I didn't realize that the pit was about to close.
That's something to take comfort from. And I think all of that gives us the ability to use
totally forgot about that
for its purposes and rely on.
So it's okay. We lost one, but we had a good day. I think I should probably stop now. I don't want to trade after that.
So you're not doing something today to help today, and then it's going to cause problems down the road. You're not worried about that kind of dynamic.
There are very few things that I don't worry about at all. So of course, we monitor. We have every quarter. We have an extensive briefing on financial stability. And we
interesting. You have your DOMs reset at pit close. This is just the default behavior. Maybe I shouldn't do that, but
we liaise with central banks around the world. One of my colleagues is the head of the Financial Stability Board globally. So we're very much monitoring these things all the time.
I totally didn't realize that we were getting into the pit close. Otherwise, I would have interpreted that spike in volume differently and not as a reversal.
They paint a mixed picture, but not one that should prevent us from taking monetary policy actions that we think are appropriate to support the economy.
All this noise right here. That's the close. Now look at that. They all closed and then they opened up new positions.
Going forward, and that this is not
Doesn't happen for me on Jigsaw, so you can come in here.
the financial markets seem to think that this is a start of
Where
a
is
series of
it?
rate cuts, and they're predicting 3-4 cuts this year. Is this your effort to try to damp down that thinking?
Let me be clear. What I said was it's not the beginning of a long series of rate cuts. I didn't say it's just one or anything like that. What I said is when you think about rate cutting cycles, they go on for a long time, and the committee's not seeing that. Not seeing us in that place. You would do that if you saw real economic weakness.
I don't remember how they do
The
it.
funds rate needed to be cut a lot. That's not what we're seeing. That's not what we're seeing. What we're seeing is that it's appropriate to
This is
adjust
quite
the
wild.
policy to a somewhat more accommodative stance over time, and that's how we're looking at it. What I said was it's not a long cutting cycle. In other words, referring to what we do when there's a recession or a very severe downturn. That's really what I was ruling out. I think if you look back at other mid-cycle adjustments, you'll see, I don't know that they'll be in the end comparable or not, but you'll see examples of these.
It's Don Lee with the LA Times. You mentioned the difficulty of assessing trade tensions in the economic outlook.
So many contracts have traded.
Could you say how much of a factor the U.S.-China trade conflict was in the Fed's decision to cut rates? And if the current stalemate and the threat of more tariffs continue, what would that mean for future interest rates and possible cuts?
So I wouldn't bring it down to any one trade thing or any one factor. I think we look at a broad range of factors, and trade uncertainty, trade policy uncertainty is one of them. That certainly includes the discussions with China. But I wouldn't be able to tell you how much of it is due to that. And without knowing, I think we with trade we have to react to the developments, and we don't know what they'll be. And
CNBS is claiming the stock sell-off on Powell's comments about no series of rate cuts is planned.
Between two large economies, you can see effects on business.
Zero hedge. Fed's credibility melting down in front of our eyes. We joke, but Powell now literally has to tell stocks what to do in the next 5 minutes.
To a much lower temperature, I think. Again, with trade policy, we're just going to be watching and trying to assess the implications for the U.S. outlook. The mechanical effects of the tariffs are quite small. They're not large as it relates to the U.S. economy. The real question is, what are the effects on the economy through the confidence channel, business confidence channel? And again, very, very hard to tease that out. I've seen some research which says that they are meaningful effects on output. As to say, not trivial. And I think that sounds right, but it's quite hard to get there is no way to get an accurate measure. You have to look at a range of estimates, and I think businesses will tell you that it's a factor, particularly manufacturing businesses that have supply chains that cross.
Can you believe that the mini
borders.
one touched 29.60 at one point?
Many of them have made adjustments, and
It's just look at the fury over there in the indexes. Is just a constant flurry of activity. It's just whoosh going and going.
Dow Jones Newswires. Thanks for the question, Chairman. As the press conference, as this press conference has gone underway, markets have declined. The Dow's down as much as 400 points.
Oh, okay. Now we get to talk about it, huh?
What I'm hearing is a reluctance to provide more guidance around the future path of rates. And I'm wondering if that reflects a greater lack of consensus on the committee and, how much consensus do you want to see around these decisions, and how split are people about this?
You're right. There's a range of views on the committee, but the committee
There's
is
a range of
unified,
views,
completely
but we're unified
on our dedication to making the best policy decisions we can make, and that means people have a responsibility to do their best thinking and present that thinking, and I wouldn't have it any other way. In terms of the way forward,
okay,
we will be monitoring the factors that I mentioned, and we laid that out in the in the post-meeting statement, and that's the roadmap we're going to be following going forward. We're going to be data dependent. We're going to be, as we always are, doing what we need to do, what we believe we need to do to support the economic expansion.
Hi, John Heltman with American Banker. So it's been about 18 months since the Fed issued its enforcement action against Wells Fargo. And I was wondering if you could characterize the progress that the bank has made towards the shortcomings that it had in its risk management processes. And I'm also curious whether their lack of a permanent CEO has hampered progress in your eyes.
So the problems at Wells Fargo, that arose at Wells Fargo around risk management and consumer, the way they dealt with the consumer were actually pretty deep. And I think the company realizes that, and they're not going to be fixed. They haven't been fixed quickly, and frankly, we didn't expect them to be fixed quickly. So they will be under the growth cap, our enforcement action, until the board votes to lift it.
Okay.
And that's not something we're considering doing right now. And the company is working away to address these issues. But as I said, they're deep-seated issues, and it just takes time to address them. I wouldn't comment on the CEO question. I don't really have anything for you on that.
I mean, he's just
Pleased
crazy.
with the responsiveness you're getting from them? Do you feel like this is going the way that you kind of wanted it to go?
I'm not going to characterize it. I have characterized it. We have an enforcement action in place. The company's working away at addressing it. They take it seriously. I think they do see it as we do, as something that has to go deep. And we'll lift the growth cap when we're satisfied.
With Marketplace. So when we
Look
have
at how
the next
thin the order book is in
recession,
ES. See that?
the Fed will have less room. It will happen. The Fed will have less room to maneuver cutting interest rates since you're cutting now. How big of a problem will that be?
Now it gives it to me. Good grief.
The premise is not. I'll question your premise for a second. If you remember, whether again, one of the purposes of our cut today is to support the expansion, and we don't know when, and if it really works, if that works very well and the economy gets going again, you don't know where the funds in other cycles, and I don't know whether this will happen or not, but in other cycles, the Fed wound up raising rates again after a mid-cycle adjustment. Again, I'm not predicting that, but I don't think that we know that we'll have less ammo because of these things. That's one thing.
You won't be able to cut as much if rates are low. I mean, you will have less ammo in that sense.
Well, but you're assuming that we would never raise rates again, that once we've cut these rates, so they can never go back up. Again, as a matter of principle, I don't think that's right. In other long cycles, long U.S. business.
Interesting
cycles
that they don't care about him saying
this
that.
kind of event where the Fed will stop hiking, in fact, will cut, and then we'll go back to hiking. Again, I don't know whether that'll happen here. It doesn't seem like something that's in.
There's going to be some trap traders here if we can get pushing down.
The other thing is, I think by extending the cycle, you do have a lot of benefits from that, and I think we will use the tools that we have. A couple of rate hikes one way or the other isn't going to matter so much. If there is a downturn, you're right, there will eventually be one. We'll use all of our tools aggressively as we need to when that time comes.
Jean? And then Courtney. Hi, Jean Young with M&I. Can you give us an update on the ongoing reassessment of the inflation framework?
That Zero Hedge posted the Picard facepalm picture with Powell saying, don't assume we'll never hike rates again.
Review is really it's really there to look at the way we make policy in the longer run. And it's not something that enters directly into our discussions today. We've had a series of meetings called Fed Listens at almost all the reserve banks. Soon it will be all the reserve banks.
5K
and we meet there
at
with
14
the
half?
constituencies that we serve, and they've been very, very
There
successful.
we go.
Hearing
Thank
from
you.
people, not just economists, but people who are not economists, how their lives interact with the Fed's work. It's been great. I got to say, it's been even better than I hoped it would be. We're just now beginning the process of incorporating all of that feedback, and we're going to be having a series of meetings beginning today and yesterday as we evaluate the questions that we're asking about our framework. So it's very early to say where that's going, but we're setting the table now and looking at what our framework is and looking at how it's performed, looking at how all frameworks performed around the world during the global financial crisis. I expect we'll be at this a while. I'm very excited about it. I think it's been a good exercise. I think it's opened us
Nobody's
up
hitting me.
To sunlight and perspectives that we might not have gotten otherwise. And I think it's a good time. You have 10 years after the crisis, you're really living in a new normal.
I'm disappointed that it didn't give me more on that
monetary
one.
policy, and it's a really good time to step back and ask whether there's some things that we can do to improve our framework.
Courtney and then Brian for the last one.
Hi, Mr. Chairman. Courtney Brown from Axios. Can you give us a sense of whether the committee feels constrained at all by the market's expectations for more cuts or other developments in financial markets?
So I think this was well telegraphed. What we did today was very consistent with what we had
Yes,
said,
it was.
we were going to do. I mentioned the reasons for it. They've been well telegraphed, and I think I think they will achieve their goals. We do know that monetary policy works through communications and then actions that are consistent with those communications. And we think that the changes that we've made this year have really worked. Of course, we always retain the flexibility to adjust our communications and our actions in light of incoming data and the evolving risk picture. But I'll leave it there.
But I'll leave it there.
Brian Chung with Yahoo Finance. Just to expand on that point about communication, I mean, we saw that markets have been particularly sensitive with regards to New York Fed President John Williams' remarks before the blackout period. So the Fed added language in the statement that says that the committee is contemplating the future path of target range for the federal funds rate as it monitors implications. I'm wondering now there's kind of this inflection point about whether or not the downside risks, because you've had to cut rates, outweighs the fact that you still see
This guy's eyebrows are awesome.
outlook of the U.S. economy at a baseline. So just wondering if you can kind of clarify all of those things within the context of the challenges of communicating it.
Yeah, so again, I see the U.S.
It's like a
outlook
shark
as
guy.
being a positive one, and we have had these global risks to the outlook. There really is nothing in the U.S. economy that presents a prominent near-term threat to the U.S. economy. As I mentioned, there's no segment that's really or sector that's really boiling over and overheating. Nothing like that. It's within the economy. It's healthy. So I would say that downside risks are really coming from abroad, and of course we are concerned about low inflation. And by the way, those risks from abroad are affecting the manufacturing sector here and business investment, fixed investment. So.
Okay, thank you very much.
Thank you.
That's it, eh? It's getting warm in here, and this has been going on for too long. But my computer is getting hot. It's gotten hotter in here. All of that action is hitting my CPU, man. Okay. Well, now we get nice, calm music from the Federal Reserve. They should just play music all day, I think. Don't you think? Could just play music all day. We could listen to it. It'd be great. Every once in a while, they can play a commercial about their education website. Kaplawi. Yeah, I'm gonna, and now that I know about this, it's gonna be like, hey kids, guess what we're learning about today? Whew. Well, I kind of want to get those 3 ticks back. Congratulations to everyone who was wearing shorts at the appropriate time. It's still so choppy. That was so much volume that traded there at the close. I couldn't. How come I don't remember that happening in past FOMC meetings? That was kind of weird, don't you think? Well, Donald Trump still hasn't tweeted yet. I'm assuming that they're still behind closed doors with the Mongolians. Yeah. Good grief. JB says time for a liquid CPU cooler. Well, that's the problem. Is that if I had a liquid CPU cooler, it would probably cool the computer down faster, but it won't actually do anything about the ambient temperature in the room, because there has to be a way to dissipate the air from in here. And since I guess the AC doesn't see a need to turn on here, and I have the doors closed, it's just like a furnace in here. And what I need is like a window AC unit or a fan or something. If I could find a completely silent fan that would push air out of the room, you know? Well, I'm just mad because when we came in, I took that first trade, and then I was good, and then all of these other trades since actually ended up being a wash, because that one loser ended up being, well, it was 5 ticks, but that one loser ended up being bad enough to. The ZN is going to be at the top of its range, huh? That is actually a new high for ZB. They're kind of trading right now like they're going to make a pivot here, but I'm not getting a signal. It's kind of fishy, kind of suspicious. Be careful with that one. Boom. See that? Use a PC cooling fan to push air out of the room. Yeah, exactly. I need to get like some Noctua fans. Push the air, but then I need to make like a hole somewhere, right? I suppose I could put a hole right there above the door. But then that would make another hole through which noise can come into again. Well, not like that door really stops much of those birds screaming anyways. That baby bird, he is just squawking his heart out today. It's going to be funny when we get back up above 3,000 if we do. Can you believe that would be like a 40-point move if you caught the bottom? That was a pretty good bottom. If anybody shows me you have birds in your room, yeah, they're in the other room. In the morning they're usually sleeping and they're quiet, but Now that we're in the afternoon, they are just super loud. And they are sun conures. This bird is known for having a really loud, shrill squawk. So, okay, now it's giving me a reversal signal again. See, what are they so upset about? I don't think I can take it at 17, but that was the turn right there. NBA is launching blockchain souvenirs from the makers of CryptoKitties. Gotta be effing kidding me, guys. Oh my gosh. Today. You know what, Democrats? Kamala, Joe, you've got a really big act to follow. Because this was the most entertaining FOMC ever. By far. I wasn't the biggest mover or anything like that. But that was the most entertaining FOMC ever. They know you're home for the day and want your attention. Maybe. I think that there's probably somebody, their kids are probably doing something that they don't like. Like one of the kids has a hat. They hate hats. They hate hats. They think it's disrespectful to wear a hat inside. And they get very upset if you put anything on your head. Anything on your head. They're like, no, this is awful. Take it off. Take it off. Why is Get Daniel B says algos detected? If anybody goes in and shows me any order, even if you placed it and didn't get filled, below, there was a buy below 29.60, you have my everlasting respect. You have real balls on you. You tried to trade the bottom and you had the right spot. And that was 40-point move. That's like $200 or something, isn't it? Here's the thing, the Federal Reserve has done things in the past where they reduced rates by 1 or 2 and then they started raising them again. It happens. It happens. I really want those 5 ticks back. I didn't buy it, but my CCI caught the bottom? Okay. CCI definitely showed it on mine too. Oh, they're watching Frozen out there. Well, now I want to go out there and watch it, because I hate that movie. I'm telling you. Here's my problem with the movie Frozen, okay? Here's this woman. She was just crowned queen. Just crowned queen. And what does she do? She abandons her responsibilities, creates a never-ending winter, leaves her sister completely in the dark. And then here's the thing, is that they come back. They find her in her ice castle. you know, and they're like, hey, Elsa, like, you need to come back. And, you know, because it's like created a winter everywhere. And she's like, not my problem. Not my problem. This is Elsa. And then she's singing this song about Let It Go. And so what is this song about? This song is about how she has basically abandoned her queenly duties. As long as you get to be yourself, the responsibilities that you have in the world don't matter. That's what that song teaches. I don't think it's a positive message. I don't think it's what we should be teaching kids. So yeah, that's my problem with that movie. It's communist propaganda. No, it's not communist. I bet you if I thought about it hard enough, I could probably come up with how that's encouraging cultural Marxism. But if you really want a Disney movie that's communist, though, watch the freaking Tinkerbell movie. You seen the Tinkerbell movie? Come on. Powell spotted backstage with a cold press on his head. So the traders seem to be really agitated here, but there's no support from big orders, so I'm gonna leave it alone. Can you believe, though, that 127, 14.5 was the open in ZN? So we did that big move up, that big move down. We're right back to where we started. See, and the words are like, let the storm rage on. See, she doesn't care that she's harming all of these innocent villagers, guys. John is like, all right, Seth, we don't need to hear about Disney movies. I'm out of here. I'll get you later, John. The huge bounce back in stocks on Powell tweaking the one and done communication was a huge tell. The market doesn't care about hikes. It wants to buy a dip no matter what. Maybe. Okay, we are now getting the biggest spike of the day. I think that was the biggest spike of the day. No. Almost equal to the biggest spike of the day. Given the context, you buy it, but there's no big order support, so I'm not going to take it. I'm getting sleepy. I think it's time for a break. I think it's time to lay down and pass out and wait for the Democrat debate. Save my energy and wit for that. Not that I'm that witty, but come on. I want to see this trade work out, though, first. So it'd be long at 15. Okay. What is ES doing? ES looks unhappy again. ZB's really flopping around wildly too, isn't it? I'm just waiting. Any second now, Donald Trump, he's going to tweet. He's going to come out of that meeting and they're going to say, hey, President, what do you think about... Okay, there's your buy. No, there's still nothing. Well, okay, we're gonna take it. What the heck? Did you hear the kids there? Hmm. Okay, that 15 pulled really easily. Hmm. Okay, so the E-mini just had a little sweep up and this ticked down. Hmm. Hmm. Not liking what I'm seeing here, folks. Okay, some bids. Hmm. Nope. No monkey says crazy action. Yes, it was. Only 200 there bid? That's a little better. Eminu's looking a little unhappy again. Still throwing it on the ask though, huh? Okay. Good grief. All right. Well, that's probably gonna like shoot right up there now, but I'm like freaking hot in here. Good grief. I'm leaving like a. It's hot. It's hot. And I think it's time to. Well, we still got a bunch of people watching. I was thinking maybe I could wait until the close of the session and everything. But doing this kind of. You look at the big orders are still gone. I don't think that I should be trading that. So that absence is a big warning, I think. So it sucks that I lost. Those only went against me too. I could never get a favorable tick. This trade right here should not. I suppose that that's going to happen, but considering that the other ones that I was getting were like super tiny and stuff, that's not going to work. So it seems like that we got some edge even in the crazy action, but we're going to have to deal with our head a little bit better. Man, and there's so many trades here that I took. I guess we need to go in and categorize them, right? So this one where I got on 125 on it, right? Yeah, 125. This was news. And then, well, let's just hold it down like this. Okay. And then I sold it. $19.5 as a reversal. Yeah, this one reversal and by where was this one? That one, I think I had it as a continuation. This one was a reversal. And this one that I took the loss on was a reversal. Okay. Yeah, it's hot. I'm really, really hot right now. It did turn out upwards. That sucks. Okay, well, we'll see what it does later. I think it's time for me to quit. I think that I'm just toast. Scott Taylor says, thank you, Seth. Thank you for watching, guys. I had fun. I wish that my trading was I wish that I had handled the ender part of my trading a little bit better. There was a couple that could have gone. I could have gotten over 300, but you know, it happens. But this is some of the best trading that I've done. I'd say that my adjustments have been working really well, so I'm super happy about that. Anyways, I am going to stream during the debate tonight, so I'll see you guys then. In the meantime, stay profitable.